All right. It's time to take a look at the stock market to see what exactly is coming our way. And I'll tell you what, if GDP isn't getting the old hairy eyeball right now between the negative read that we got yesterday and the fact the Atlanta Fed said so far through personal income and outlays that, maybe Q1 was a one-off. And I think that the market, well, I give that commentary on what I think that market's going to do. But I just want to let you know that I tried to buy a plane ticket yesterday by telling dad jokes, and all the person said who was trying to sell me the ticket was, that's not fair. Airfare, paid, I don't know. Not a great joke. We're going to move on from here. So let's pop up into this first thing that I have for you here. So trading economics for Thursday, and what we have at 8:30 initial jobless claims. You might probably already be past that by the time that this video comes out. We just don't need anything wildly different there. So we should be all right. Consensus 224, and I don't expect to see that surprise coming in. ISM manufacturing happens to be at 10 a.m. That's going to affect what we see for the Atlanta Fed GDP now, probably a couple hours after that drop. So around noon or 1 p.m. Eastern time, watch for that. And what we want to see is numbers up above 50. The market's going to love that. That's going to help things out because that would be expansion. If we see down below 50, that's contraction instead in manufacturing. If we move over into Friday, non-farm payrolls and unemployment rate at 8:30. We want to watch for those. Right now, consensus 130, forecast from Trading Economics 140. If we come up more closely to what we had the previous month, up in the 200,000-ish range of things, market's probably going to love that a whole lot more. So we'll watch for that actual number to come out around the 8:30 hour. Anything that points towards a stronger labor market is going to be favorable because it really continues to take away from that recession narrative. Same thing for unemployment rate. When we look at that 4.2% consensus, that'd be stable with what we saw from the previous month. 4.2 is fine. It's just fine. Anything down below that is going to be great. 4.1, 4.0% unemployment. Market would absolutely love that. That would be a very strong upward catalyst, or at least a very strong release of downward pressure on the markets. I think that with a strong number from non-farm payrolls would allow us to break that 200-day moving average for the Qs and for the SPY, tracking the NASDAQ 100 and the S&P 500. So if we get soft numbers instead, if we get a number way south of what the consensus is, because that's already priced into the markets, dropping down into 2 digits, for example, the market would probably hate that quite a bit. If we drop way down into the 2 digits, the market would probably hate that a lot. And if we look at the unemployment rate and start to see that 4.3% or higher and start to really add to that narrative of recession, the market's probably not going to like that. It's probably going to be downward pressure, at least at first. And that would probably continue until we start to see the bond market start to say that the Fed is getting closer to cutting more aggressively, because that gets into another pillar besides the strong labor market. Another pillar is easy monetary policy. And when that easy monetary policy is suspected and starts to hit, that's when we start to see the market start to get propped up anyway, because that can lean into higher GDP, which is another one of the pillars. And then the other thing is subdued inflation, which so far inflation's looking pretty well subdued. So that's what we have coming up for us for the rest of this week in terms of those catalysts. The reports that we got so far were actually pretty darn good. And let's jump over into the charts right now to see where we're at in the pre-market. Yesterday in my video, I talked about how important it was that we're above the 50. Watch for that 200-day at 491. We'll probably get a rejection off that initially if we get up that high. We're up pretty well in the pre-market hours as it stands right now. And if we put up the EMAs on this to look and see what we have, let's actually drag that up your screen a little bit here. Perfect. So we closed above the 50 EMA. That's great. And then what you just saw up there was the simple moving averages. That's this magenta line coming down to the 50 simple moving average. Looks like we could open above that. So that puts us above everything except for the 200-day. 200-day is probably going to kick us pretty hard to knock us back down. And then we get to retest it and find out if it's support or resistance. It doesn't have to play out that way, but I could see it playing out that way. We want to watch for that. And then if we go over to SPY, tracking the S&P 500 here, there we go. Up above the 50s in the pre-market, EMA and SMA up above both of those. We want to watch that hold as support. If they do, watch for that 200-day, which happens to be around 573. This doesn't mean necessarily full-on bull market, but it is a release of some of that downward pressure. It kind of chips away at the narrative that we're going into recession right now, because we're not seeing that second quarter of negative GDP at the moment. Labor market still sort of okay. Inflation sort of subdued. So we want to keep on paying attention to all of those factors, because that's also going to impact what we have for IWM, which is still probably going to have a bit of a rough time until easy monetary policy kicks in and we get lower rates on Well, basically, they're just looking for cheap money, but we also need a strong economy to go along to support that cheap and easy money for these low market cap stocks that you will, these small cap Russell 2000 stocks. They need easy access to capital, and right now they just don't necessarily have that same easy access to capital as maybe some of the bigger companies do. They don't have as much of a cushion, if you will. Now, the thing that I'm really excited about is Bitcoin, and let me zoom in to see the near-term price action, because there's something I just mentioned yesterday in my video that goes back to what I was talking about a few weeks ago. So I said that we need to get on top of 95,118. So far, we have done that. That's all the way down here on your screen. We'll collapse that, and we're going to zoom in a lot more so we can see it even better. There we go. 95,118 happens to be right about here where my cursor is. And right now we're at 96,197 as I record this video. Now the top of this candle, this is what I want to talk about. Top of this candle is on this gray ray that happens to be right across your screen. And if I actually go into that color and just up the opacity there you go. Now you can see it in bright white going across your screen right here. And if I go into the monthly chart, you can really see, there we are, what that is that we're looking at. That ray right there, I've talked about these before. All these go back to this central point that we have back in November of 2013 and extend, they connect to some other point. They really do explain a lot of the supports and resistances that we see over time with Bitcoin, and that 95,118 that is getting broken. If we go back down to the daily chart to look and see where we currently have resistance, I said it would be around the mid 96,000, so 96.4, 96.5. So we actually peaked out on this at 96,399 and got rejected. We want to sit on top of this ray that's going across your screen for further bullishness. If we do, we have room up to a six-figure number once again for Bitcoin, and we just might have the momentum to make it happen. The last ingredient in this recipe right now is this volume. We want to see a volume push to get up over top of that ray, a volume supported move like we had back here, and even going back to these two candles. That would be absolutely wonderful to see that volume supported move. If we take a quick look at XRP, with what we have going on here, currently, we tried to break down below the 50. Let me take off the technicals that are up here for you so we can just look. Tried to break down below the 50 and the 20 simple moving averages. Closed up above them yesterday. Today, sitting back up on top of the 50, and we're looking for the 20 to cross back up above the 50. That's a bullish sign. Still up above the 200. We're up in bullish territory. The RSI pretty much completely reset to prime bullish territory, at least on a daily basis. We got a lot of chop to make it through, but if we can make it through about $2.60 on a nice strong push, hopefully with volume support like I was talking about for Bitcoin as well, that should give us another shot at that $3 mark. Hopefully that $3.40 or $3, yeah, it was $3.40. I was thinking $3.43, but it's $3.40. That's what we're looking for XRP. Now, mind you, BBAI is a penny stock that I had talked about previously. There we go. And if I quit moving my technicals, there we are. I need to lock them down. Sometimes I forget to lock them and then they move around when I try to move this for the videos for you guys. So you can still see we had the volume confirmation move. We have the RSI cross above 50. It remains up above 50. We broke up above this 50. EMA lost it, but found support at the 5. If we get that pre-market, if we open back up above the 50 EMA and we get the volume support on it today, this could be reactivated, send us back up to $4 plus per share for BBAI. So I think that this play stays alive for us. I did close out, I think 14% profit on the last calls that I had. As things kind of subside a little bit, kind of tapered off with the rest of the market sell. And now maybe it kicks back up again. Maybe these penny stock plays really come back and help us out. And just to touch on Recore real quick for you, man, just really finding that resistance right about the 50, even in the pre-market hours this morning, right around 105, just doesn't want to sit on top of it yet. We need to get on top of that 50 EMA to keep the gravy train rolling on Record. This could be another one of those penny stock plays that really pans out for us. The last thing, TMF, also, I mean, this is actually not a bad setup here. The RSI is above 50. We got this green candle. It looks almost like a bullish Harami candle that we have going on here. Be better at the bottom of things rather than what we have going on right now. So not my favorite setup, but we are above the 5, the 13, and the pre-market has us up above the 50. Not so bad. Now, mind you, the bond market typically moves inverse of what we have for the stock market, but I think that we still have enough of a caution that maybe we still get that levity. Maybe the long-term treasuries move up a little bit where maybe it's actually not a bad play where if we don't expect recession, we don't expect a lot of money printing, that we could see a little bit more safety come back to, or at least thoughts or feelings of safety come back to those long-term treasuries. where we don't have to worry about a U.S. debt default if the debt crisis continues, and the debt crisis probably does continue. So guys, the whole recession narrative, it still exists, but it does have some holes in it right now, and kind of like the maybe we don't have it. And that high voice that I just did kind of goes with the market also moving up higher. We want to keep on chipping away at that narrative that's going to allow the markets to move up. Things that add to the narrative of recession are going to push it right back down again, especially if we get a knee-jerk reaction where we have some sort of big news that goes along with it. Tariffs can actually help reinforce that narrative of recession as well, not only U.S. recession, but global recession. So like big bad tariff news of just wildly high tariffs, once again, can be something pretty destabilizing. Now, mind you, if we continue along with negotiations, assuming that they're moving forward in the first place, that's something that as we see kind of the tariff thing subside or ease, or that deals are being made and they're pretty favorable deals, then those are things that can allow the market to also experience that levity. So we'll watch what comes up over the next few days. I'll keep on watching the technicals. I'll keep on bringing it back to you. If you guys want to see more of my analyses, see I'm profiting in these markets, see me and the other expert panelists over at the Discord. We have a joint Discord together, thousands of members over there already. The link's in the description. Sign up for the earner tier where you get the bread bot, which helps to tell you when those big moves are coming. You have AI tools, advanced charting tools, and like the community, you have crypto, you have stocks, you have bonds. Really anything financial related is over there waiting for you. Just click on the link. Just take a look at the products and services that are offered and see if it appeals to you. And I think you're going to find that there's something for everyone, and definitely lots of things there for you to help you support your journey towards financial freedom, or just adding extra alpha to your portfolio. And if you guys want to learn about technical analysis, how to trade using the bread recipe like I do, and then also the options trading, there's 2 courses for that down in the description. Click on the link for Stockmo Academy. Use code word doctor when you sign up for the course. It's going to save you a ton of cash. And if you bundle the 2 courses together, they really are a match made in heaven. That's going to save you even more cash, guys. Thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.